Hey Trang, how are you?
Seth, I'm doing well. How are you?
Doing well. Good to see you again. How are you?
Oh, you look different. Is it because you thinned out the beard? What is going on? Did I recall that correctly?
I did shave off the beard. I am performing in our town play in December. Our last show is this weekend, and the role required me to be clean shaven. So I'm trying to hang on to what stubble I can, you know?
Good luck with that. I was gonna say
Yeah,
you're playing
thanks.
the baby Jesus this year.
Apparently, yeah, be a big fat baby, you know? Well, I hope you're having a good month so far.
Yes, I am. Thank you.
Awesome. Awesome. Love to hear it. I just sent out a reminder to everybody who should, yeah, looks like some folks are hopping on and we'll record this as always. But
Who
yeah,
did I
excited.
see? Was it Jason that I saw at in where was I? Nashville? He was there at the AIM Fuse and stopped
Okay.
by the booth to say hi.
Oh,
I
really?
believe it was Jason. I
Was it?
may be getting that wrong. I apologize.
No worries. Was it Jason Dowdy by chance?
Very tall gentleman out of Colorado, maybe?
Could be. Yeah. I mean, I've actually never met Jason in person, so I can't tell you how tall he is, but I don't know. This sounds about
Anyway,
right.
that was fun. I'm like, oh my gosh. He goes, I've seen you on my computer screen. I'm like, oh my God. I don't know how I feel about that, but that is part of the job.
You're a celebrity around here, Train.
Oh goodness. Well, I'll keep it short and sweet today.
No, you're good. Did
You have another piece to this meeting?
We do? Yeah, we're gonna have our account rep Kyle Wright over at what was AFR, now eLend. They're gonna go over some stuff with us. I know they have some interesting down payment assistance. Maybe do like some quick portal navigation and things like that. So yeah, I mean,
Do you
never hurts to get
would you
trained.
like me or Kyle to go first?
You're gonna I have you scheduled to go first. So
Okay,
yeah,
fantastic.
whenever you're ready. Like I said, we've got a few on at this point. We record these, so it's all right if you want to get started. It's 1 o'clock. I think we're good to go. So.
Okie doke. All right. So, hey guys, it's Trang again. We were trying to get this meeting sorted a little bit sooner than today, but I know things were kind of crazy. But about 4 weeks ago now, so a month, we rolled out some new features that I wanted to share with the team. And let me just go ahead and share my screen and we'll get started. Let me. All right. You let me know if you can see my screen.
Yep, you're good to go.
Okay, fantastic. I'm logged in as Ryan Davis, and so I hope he doesn't mind, but we're going to go into his business later on. So I'm like, no, let me just pick Ryan and ask for
I'll speak
forgiveness
for
later.
him. He's totally fine with it. Yep,
Okay, good.
no problem.
All right, good. So today I have really three items that I wanted to review with you, kind of like an update on what we rolled out recently. The first thing is going to be the refreshed Refi Finder. So if at any time y'all are looking for refi leads in the system, we have some new features that I want to show you today. The second piece is going to be a loan loss report. A loan loss report will basically just say, hey, of all of your past clients that you've worked with, how much business did you lose in 2024 because your past borrowers went elsewhere? All right, so it'll kind of give you some insights on that, and then we'll have an actionable takeaway, and that's through our home value report, and it'll kind of help you stay top of mind with all of your past borrowers to kind of like balance out the business that you're losing. So anyway, so with that, I'll get started. Feel free to stop me with any questions, you guys, if you have any. If you pop them in the chat, I'll ask us to kind of relay those to me. So let's get started. So under the mortgage tab, under find opportunities, this is going to be the Refi Finder where you'll find that. So let me just show you real quick what I have in here. So let me reset my filters here, and I'll just select Denver, the city. Okay. So if I type in the location for the Refi Finder because I'm looking for refi leads, you guys, I scroll all the way down and I see that there are over 132,000 closed loans since 2017 when we started collecting data in Denver. All right, so that is a ton of opportunities there, but not all of them are going to be qualified. Okay, so 132,000 opportunities or closed loans. From here, let me just show you what we have. The address, if at any time you want to see who the players were, this is new. This will kind of give you, click on the address, it'll kind of give you a little bit of back history on all of the financing or mortgage transactions on the property. For this particular one, which was on November 4th, 2024, this is highlighted in blue. You see that little background there? So this information, the big screen, is going to show you a little bit about that particular transaction. If you wanted to click on anything else, it'll kind of give you who the players were back in the day as well. So let's take a look at that. So we have Christiana Hamlin with Hazel Mortgage as the LO. Here are the agent partners. Of course, you can go into their profile and see what's what, their company profiles as well. And then you'll have the borrower names and all of that good stuff. You can take a look at the property on Zillow. We have the loan amount, loan date. So some of this is going to be very, very recent. So if you're looking for refi leads, make sure that you're omitting the ones that recently got into their mortgage, and you can use all of the filters to help you do that. The loan amount, the estimated interest rate is also going to be in here. So if you say, hey, let me see what's what in Denver, let's filter by everything over 7% and click apply. Now we're down to 4,000 plus loans versus what was it, 142,000. So just the name of the game here is to kind of hone in on your target and then go from there. So the original LTV data has always been there, but the new feature that I want to talk to you about today is the current LTV. So now what we have going on is we run a valuation on the property address so we can calculate the current LTV for you. Now, why does this matter? Because if they are currently paying PMI and they're close to 80% current LTV, maybe you get them out of that, okay? So that's an opportunity for you there. The purpose of the loan will be like purchase or refi, the loan type, conventional VA, FHA, other, property type, and then loan officer. Now this is where it gets cool because loan officer, because we searched in Denver, it's pulling up all closed loans and not just yours. Okay, so Christy Baker over at First Bank, Savannah Smith over at Elevations, et cetera, et cetera. So all of these folks here, if you see their name here, that just you can deduce that they are not active RETR users. And so in the event that you say, hey, I bet you my rates can beat First Bank, you can type in the little filter here, First Bank. And I'm just picking on them because they're first on this list here. But we type in First Bank, and now all of a sudden it just sorts for all of the First Bank transactions, and there's 149 of them. So just know that if you wanted to do a campaign against First Bank or any of their specific LOs, like Christy Baker, I could type her name in here and it'll just return all of her transactions. Okay, so like for any reason, if you wanted to target a specific LO or other mortgage company, you can type that information in there. Now, Ryan Davis is obviously an active RETR user. So if somebody types in Ryan Davis's name here, we will return 0 records. And that's cool because we actually offer our active users exclusivity to work their own refi opportunities so that nobody can snipe them from you, okay? So if they're on RETR and they try to type in Ryan Davis or Seth's name or your name, if you have an active RETR user license, they will not find anything. So how would Ryan find his transactions for refi opportunities? Under the mortgage tab, find opportunities, and instead of going to the global refi finder, he'll just go to the new feature here. It's called My Refi Opportunities. When you click on that, you see the loan officer column here. That will be all of his transactions, and then from here he can kind of farm and pick and choose and add filters to get his targeted list. Okay, any questions on that, you guys?
That's pretty cool. I think I know Ron had his hand up.
Yeah, I did have a question.
Hey,
Sorry, Seth. Didn't mean
ahead,
to cut you off.
No, you're good, man.
The LTVs, where are you grabbing the approximate value of the property? Or are you just taking it from years of being on the market?
No, so we're running a valuation model on the back end. So that's how we're able to come up with the current LTV. And it might make sense later on when I show you the home value report where we offer valuation models for you to look at.
Not a problem.
Awesome.
Great.
But good
Thank
question. Yeah.
You know what? Garrett Schuler had a question in the chat too. He says, is it the interest rate accurate?
So you guys, I was at the AIM Fuse conference in Nashville, like I mentioned earlier, and I mean, talk about putting me on the spot. Like one guy was like, "Hey, I have my phone right here. Let us see," and he pulled it up. spot on. So I'm like, whew, crowds averted, right? But the answer here is the feedback that we've gotten, because the reason why it's an estimated interest rate is because the recorded documents at the county, they do not include an interest rate unless it's an ARM. They'll include an interest rate, but everything else is not available. So in order to give you an interest rate, it has to be an estimated interest rate. If anybody else in the sphere of data providers and things like that, if they're offering interest rates, it's always going to be an estimated interest rate. But the feedback that we've gotten is we've pretty honed in on our algorithm. There may be some instances where certain lenders, offer certain rates and things like that, might be a little off, but for the most part, the feedback we've gotten was very, very positive. So you let me know, report back, and I'll report that to the team. Thank you for that question, by the way. All right, so the refi opportunities, big push right now. Been doing a ton of training sessions and stuff like that with my clients. So if you have any questions, feel free to reach out, trang@retter.app. So the next thing I wanted to show you, and this is where kind of like we get into Ryan's business here, under the More tab. So all the Retter users right now, you have access to this already. So under the More tab, you see two new features, right? The first one is the loan loss report. So I'll click on that. So Ryan Davis's MLS ID gets pre-populated because I'm logged in as Ryan, okay? So in 2024, he lost $2.69 million of repeat business because he missed out on 9 loans from his previous borrowers. That's a loan loss percentage of 75%. Now, the cool thing is that we can tell you where that business went and all that good stuff. But just FYI, if you are logged in and you go, I would love to use this as a benchmarking tool. Let me see how Ryan compares to Seth. So you can type in Seth's NMLS ID and kind of see what's going on there. Don't sweat now, Seth. I don't know your NMLS ID by heart, so you're spared.
Well, I'm kind of curious now. You got to type it in.
Right,
so 389617. Let's go.
389617. Oh my gosh. Under, over, you guys? Okay.
It's not gonna be good. Probably lost.
All right, 4.43, missed out on 9 loans, 69%. All right, so what you'll normally find is somebody mostly hovering over 60s and 70%, but sometimes you'll see like high 80%, low 40% and stuff like that. So it's a good benchmarking tool. So not only for LOs can you compare yourself to your peers and competitors, but also if you wanted to type in a company NMLS ID for your own company or others, you can certainly do that too. Good for the leaders here, 2191655. And here's I Am Brokers. And as a whole, you guys, 52.83%, but you lost out on $8.55 million, 28 loans. So just to go off of this page, again, this is 2024 data. 2025 data will be available in the new year, maybe June-ish is what I hear. So here, where are your loans going? By units and by volume. Okay, so Barrett Financial Group, Loan Simple, Nova, United, and Mega. So does anything surprise you there? If you scroll down, you'll see the different transactional details. And so this is going to be good for you to understand. Okay, so Danielle Parsons here worked with Kevin back in March of 2024. The prior loan amount was $668,000. This is the address. It's the same address as the new address. So just know that there was a new transaction in November of 2024. New loan amount, they went to Kevin over at, so they followed him to Barrett. That is what it looks like, correct? So he was with IMB and now he's with Barrett. All right, that makes sense. So here, Ryan Hillard, Wesley Martin went to Stephen Woods over at PennyMac. Ryan went to Michaela Lorch, went to Jason. So just FYI, if you see prior address and the new loan address as the same address, just know that it's likely a refi transaction or an equity transaction. But if at any time you see different addresses, that would mean like Sunny Humans here. They got into a new property and they did not go back to Michael, but they went to Laura over at the Prodigy Investment Group. So that's how you would kind of understand that. So if at any time you wanted to click on any of these addresses, it'll pop up that normal box again. It'll kind of give you details about the transactions on this particular address. Okay. So we're not showing this because it's a walk of shame or anything like that. Okay, we just kind of want to know where we're at so that we can improve. So how are we going to try to maintain and retain our existing business, our clients? You know, a lot of folks say, I want to be your loan officer for life, but how are we doing this? Okay, and one way that RETR can help is through our new platform or offering called Home Value Reports. So any of y'all using HomeBot or My Home IQ at all currently?
Yes, I know several folks that are accompanying her.
Cool. So this is going to be a competing product. Okay, so if y'all said, hey, RETR now has like a HomeBot equivalent, that is exactly what we're doing here. So it's going to be like an all-in-one place for you to kind of manage everything. So under the More tab, this is Home Value Reports. The second new option is Create and View Reports. So for those who are not familiar, just FYI, it is a monthly report that gets emailed out to your past borrowers that just says, hey, here's worth this month. As a homeowner myself, I love getting that stuff because I'll go on Zillow all day and all night. Look at that Zestimate move, you know, back when it was moving, not anymore so much. But this email will just say, hey, Seth hooked you up with this report. He knows this is like your biggest investment. And so we want to make sure that you're staying on top of everything. So this report, you guys, will tell you the different valuations. So we have 4 valuation models here, but we're saying, hey, this property is worth this. Take a look at what you can do with that equity in the property. Okay, so it goes on to give you different what if scenarios where you can say, yes, actually, thanks for the report, Seth, but I'm at such a great interest rate right now. I'm not in the market to do anything. So if you enroll me in that to receive this monthly list here or email here, all you'll see is that I opened the email and I looked at the value. Okay, so I'm not clicking and clacking and engaging with this report because I'm not in the market to do anything. But I like looking at stuff like this to see what's what. But we report back on every click that they engage with the report. So not only, let's say you enroll 100 of your past borrowers to receive this list, what's going to happen is you'll see like 40% merely opening the email, and then you'll see like maybe 6 who are like really honed in on debt consolidation, and I want to upgrade my home and I want to downgrade or whatever the case is where they would need your help. Okay, and so that, then I would say, of the 100 of folks that you enrolled, focus on that, prioritize that, because this is a tool to kind of let you identify who's more likely to act. Okay, so like I said earlier, I'm not one to engage in a report like this. I just want to see the value because that's what homeowners do, you know? So just know that that is being tracked for you. Okay, so this particular report here, know that you can customize it as well. So if you wanted to load up your headshot will show here, your contact information, your logo, and then RETR's colors is teal. So you can actually change the color scheme as well to match your brand or IM Broker's colors and stuff like that. So just know that that is an opportunity. You just do that through the through here, Ryan Davis, and then account settings. Okay, so I just wanted to show you here, back to the home value reports page. If you click on clients enrolled, you'll see 0 here. Click on enroll past borrowers, and this will show you of Ryan's past borrowers who he can enroll. So the first 100 reports every month are free. So this is a welcome to the home value report thing. So if y'all are using HomeBot and then you don't want to move into the next tier yet because that's more than you need, I encourage you to run them through home value reports to see what kind of feedback you're getting from your past borrowers. Okay, so what you would do is just click on enroll, just type in their email address, and then click generate report, and they'll start getting those monthly reports from you. Stay top of mind with your clients. Any questions?
Yeah, that's pretty cool. I mean, it looks like we can, if we wanted to get rid of, another system or something, it looks like we can go in there and buy additional slots.
Yeah.
I like the fact that it gives you 4 different value estimates too. I mean, it's never 100% accurate, and that's a lot of the feedback we get from HomeBot and My Home IQ is, oh, the value is never accurate. And it's like, well, of course, it's on evaluation.
Yeah, and then somebody also said, hey, could I just omit the other 3 and just give me the highest one? Because then, home buyers will be like, no, I want to see that my stuff is worth this much, Trang was not lying to me when she said this was going to give you a whole lot of equity. So it just allows you to see how much potential equity you have, and then they'd be more apt to engage with you. But we do offer the multiple AVM values so that in the event that they want to see others, they can have access to it. But again, 100 folks you can enroll for free. Beyond that, I think it's 25 cents per report per month. So very, very competitive. Think about what you're paying right now with other providers. And also, if at any time the leaders come together and they say, hey, let's just get our entire portfolio into home value reports, we have that option as well. So it's not like super manual, and it's, you can roll everybody in at once. And then we offer price concessions on that as well. So
And Trang, I was going to ask, is there like an API integration between like Zapier and Arrive? Like if we have a loan close and Arrive, would it automatically come over here? Or is this something where it's just pulling data out of, the public record, your data provider, and then slipping it in here? How does that work?
Yeah, so there is no API currently, but it's funny that you mentioned that because we have we recently rolled out the very first version of our RETR API. So I think that the first version only has like 3 or 4 data endpoints. So like eventually in subsequent versions and releases, we'll add more to that. So like if this is something that you wanted, you could say, hey, and something customizable, right? So like the purpose of RETR is to help LOs grow their business, but like for custom reporting type stuff or custom request type stuff where we have the data, it's just not bundled up in the RETR package like it is here, you can actually go into the API and request, different data points, and then just say, hey, return the data to me, and I'm gonna create my own custom report. So food for thought, if there's anything kind of like for instance, oh, I have an MSA with, a few mortgage companies, and I want to make sure that I can check their production on how much business they're sending us, that I just want to make sure they're compliant. Okay. So right now you could do that in RETR, but depending on how many brokers and agents and stuff like that, you would have to go and click on a ton of different pages. But the API would allow you to do that. Just say, hey, I want this, this, and this, and then boom, you get your custom reporting. So that I believe Ryan Davis is on the invite list to start conversations about that if he was interested. So just FYI, he should be looking out for an email from my CRO, James Hooper.
Will
All right,
you
so
include me on that as well, Trang, just to make sure that Ryan's got a ton going on right now. So yeah,
okay.
copy me in on that.
Okay, will do. All right, cool. So Seth will copy you on that
Awesome.
API. Got it. All right, so that is all I have today for the RETR refresher or review. Any questions at all, you guys?
Garrett just asked a question in the chat. He said, are there emails and or phone numbers on closed loans for general user?
Are there emails? So we don't provide email addresses at all, but it would be something that you would go into your Rolodex mobile or LOS system to kind of populate this. Now, if they were from, a client that you closed when you were at a previous company, then, you would have to go through other ways to get contact information. So for instance, much like if you download and export out your book of business from 2017 or refi leads, anytime that it has anything to do with the borrowers, we will not have contact information. We'll have contact information for the agents and loan officers and stuff like that, but never for a consumer or borrower. So what you want to do is once you get that data out into a spreadsheet format, you can export that data from RETR. Just know that you can send that whole spreadsheet off to any skip tracing company. A lot of good feedback from a company called Versium. V as in Victor, ER, S as in Sam, IUM. I don't have any skin in the game. I'm not getting anything from it, but a lot of our users say that they like Versium and then they get good data back from them. Also, you might want to say, hey, if I have a good relationship with my title rep, sometimes they have tools that can append contact information for you for much cheaper than, say, any skip tracing company.
And just on that note, guys, quick reminder, make sure that you are validating your, if you are doing skip tracing, data mining or anything like that, make sure you're checking against the do not call registry and that you're in compliance with state and local laws. I know Texas has some very strict laws about texting people. But I basically just made it a habit. I'm not texting people in Texas anymore.
Yeah, the onus is
fines.
very much so on you. So be careful.
Well, and it's I know we're licensed in a lot of different states here, primarily Colorado, but just make sure that you know what you're doing. These are folks that you don't have a standing relationship with. You don't want to get in trouble with that because it can be very expensive and add up quickly. So. And if anybody has questions or is not signed up for RETR, feel free to reach out to myself or Trang. I did drop Trang's email in the chat earlier. We do have an enterprise account with RETR currently, so you do get a discounted price. Thank you, RETR, for offering that. And if you guys have any questions on that, let me know. Looks like Kyle Wright with eLend has a question. So Kyle, go ahead and ask away.
Yeah, we use RETR over here on the lending side, Trang, and we got an API built into our CRM with RETR, so there's a lot of benefits to it. But something caught my eye when you were presenting. I know I'm not an originator, but when you were talking about the current LTV and the ability to position that for a refinance, how are you structuring that current LTV? Is it off of the original loan amount recorded on title, less the payment schedule, or do you have any factors in there that also include additional payments? Do you have any APIs from the servicer that fill into like additional payments? I mean, obviously the value of the property you can pull from a lot of different sources, but what about like the other side of lowering the balance?
It is all pre-calculated, so it's not going to be the same value at the time of sale. So all of that information is calculated. It presents the closest current LTV.
Gotcha. But if the client went and made an additional payment, you wouldn't have that data, is what it sounds like.
Yeah,
it would only be off of the amortization schedule.
Correct.
Okay.
It's probably running off of an EM, yeah.
Yeah. Mm-hmm.
But
okay.
This is super cool. I love seeing the loss opportunity stuff. I mean, it's just good reminder to say, hey, like stay in touch with your database and check in with people because there's business still happening, whether or not you think there is. And I didn't know about the home value report either, so that's very cool. I'm going to explore that a little bit more also.
Yay. Great. Well, my job here is done, you guys. If y'all have any questions, feel free to reach out. Thank you for the time, and I appreciate your attention and time and all that stuff. So, Merry Christmas, Happy Holidays, all that good stuff. I don't talk to you soon, and thank you so much for your business. We appreciate you very much.
You as well. Merry Christmas. Thank you so much, Trang.
Bye, you guys.
All right. So next on our list today is Kyle Wright with formerly AFR, now eLend. I had a transaction with them recently, and guys, it was a great experience. I know Nathan has closed a number of loans with them as well and had great experiences as well. But without further ado, I want to give Kyle the floor. He has some pretty cool stuff to talk to us about eLend. So take it away, Kyle.
Absolutely. Thanks, guys. So I'm going to share a deck. I actually built this deck like a week ago, so I'd love your feedback on it. Just going to cover the high level aspects. We have a lot of great pricing on Govy right now. We also have a lot of great pricing on non-owner occupied, on conventional. And when I say great, it's usually near top of stack. We won AIM Lender of the Year in 2025, and that's kind of catapulted our turn times a bit, but we have solutions involved to get those down. And I will say, I like to brag. I'm a responsive AE. I don't call you. Probably most of you guys haven't even heard from me. I don't call you, but when you call me, I will call back and I will solve whatever problem you have. So that's kind of how I pride my business model. I want to cover and Nathan, you can probably speak to that. I saw you just turn your camera on. It looks like you're going to add to that.
Yeah, I was going to say, like, I have reached out numerous times when we've been, in a jam or needed something, and your response time, Kyle, has been truly impressive. It's one of the best out of all of our AEs.
So I can definitely back that up.
I pride myself on that because, like, you don't need me to call you and talk about the sports team that you support or Quidditch if you follow Harry Potter, right? So you just need me to solve your problem at hand, and that's kind of what I pride myself on. So I'm going to cover this DPA product, though, because I think this is a product that nobody really knows how to fully utilize, and it can really help you grow business. Can you guys see my screen okay?
Yes.
Okay, cool. So the first slide, it's just a disclaimer. I don't need to read it, but just from marketing perspective. So what sets us apart with our DPA is it's a true grant, and it meets the entire MRI for your down payment, right? It's forgivable to the client at close. So, and I'll go through some of the competitors in the grant space later. I've looked at about 15 different ones from local to national. There's no repayment There's no future appreciation owned. It's a true no second lien grant. So when a lot of these competitors come in, it can be difficult to streamline or refinance or put a HELOC on without paying off. The other benefit, because it's a grant, it's instant equity at close. It's built upon the standard FHA guidelines, so you can combo that with up to 6% seller concessions. It works with a variety of housing, manufactured, PUDs, et cetera. It works with 203Ks as well. So if you're doing a renovation loan or repair escrow, you can combo that with the DPA grant. And at any point, feel free to step in, guys. And I'm gonna make this quick. There's about 10 slides. So why you need this? This is a NAR study over here. You can click out on it, but what it says is that 53% of realtors say that down payment is the top hurdle for buyers. Only 23% of realtors feel confident in their DPA solutions for their clients. So you guys know this, right? What's acceptable for MRI, but I just highlighted it over here, and what's acceptable and what's not acceptable. So the big thing is, right, unless you've got somebody that's going to give you the funds or you can liquidate assets and they're properly sourced, you're really kind of stuck with using cash on hand that's easily sourced. That's where the grant comes in and can fill that void. Some of the common ones that I see people try to use to cover MRI, which aren't acceptable, are over here. So this is what sets us apart differently from the other grant providers. It's how easy it is you qualify for the borrower, what that eligibility looks like. A lot of folks require some combination of this left side over here of, hey, you've got to be less than 140% median income, or it's census tract data, or it's some form of occupation. While all that's great, and we'll ask if you have it, the big thing with us is as long as you have approved eligible findings on the FHA total scorecard, or you can meet our manual underwriting requirements for FHA, that's it. You don't have to worry about all this other stuff as long as you have this on the right. So if you can meet FHA guidelines, be above a 620 FICO, and just kind of meet these notes over here on the right-hand side. I will say this right here links out to our portal where you can see the full thing, but I highlighted everything you need right here. So there's nothing else that's going to be like a gotcha. It's got to be a broker transaction, borrower paid comp, because we know these aren't going to sit on the books for long. 620 FICO, 1 to 4 unit primary. Manufacturer's fine, FHA, PUDs, that's fine. Non-owner occupied, that's fine as well. We allow them on 203Ks and repair escrows. And I would say get the seller concessions on these, because that's where you can really get into a situation where it's a zero cost loan for your borrower. We do require a HUD approved homebuyer course that can also be reimbursed on the CD. We reimburse up to $100. I'll also talk to you about our favorite HUD approved company. So
hey Kyle, really quick, did you say you can do down payment assistance with the 203K?
Yes, sir. So
I
closed one in Kentucky that was the broker's first loan too, so I was a little nervous, but it was a 203K manufactured DPA loan. So It hit the trifecta of crazy, but we got it done. I will say, if you do renovation with us, and we specialize in renovation, we have our own renovation team. And again, I can do a renovation slideshow for you guys because it's a unique product in and of itself. But we have everything in-house. We don't use Granite. We don't use any third parties. It's all our internal renovation team. So if you need to get a hold of somebody, I can call them on my phone. I don't have to sit there and wait for 48-hour, responses. So that's
awesome. That's good to know.
Yeah. So let's go to the next slide. Oops, jumped ahead. So this is what's awesome, right? Like, as long as it's an FHA qualifiable loan, we can get that full grant amount, right? And so when we look at the grant amount, and this is something to know about 203Ks, right? We're going to base it off of the purchase price of the home. So if you had a 203K that had very little renovation, maybe replacing a roof and a water heater, right? And it's 30K of reno budget. You're not going to get that 30K, that 3.5% of. So the borrower or the credit from the lender or from the seller is going to have to cover that cost, right? So it does make sense in some situations to, like, if you have a $200,000 renovation budget, you're not going to get that $7,000, right? But if you have a 31, then you might be able to get it through the seller credit. So just be aware that the grant amount is based off of the purchase price. So on regular transactions, it's not a problem. On renovation, just be aware of that. So if it's 200,000, you're going to need $7,000 elsewhere. So the loan limits for a DPA loan, it's going to be county dependent, right? And it's also going to be dependent on the number of units. So if you're in a county like LA County, where the FHA county loan limit is much higher than the FHA conforming limit, then we're going to cap over here at these values, right? Depending on the number of units, right? So on a 1 unit, $832,750. In a county like something in Arkansas, right, that might have a 500,000 FHA county loan limit, then we're going to cap at that 500,000. So it's got to meet FHA county loan limits. If it goes up, if it's in a high cost area, then it's going to cap at the FHA conforming loan limit. So I'm gonna pause there. Does that make sense? Cool.
Yep.
I'm gonna assume,
that makes perfect sense.
Makes perfect sense. Okay.
Mm-hmm.
All right. Let's go to the next slide. So why do I like our DPA product? There's no second approval required. So that doesn't mean that like you won't get a random HUD second approval from underwriting, a QC underwrite from HUD. What that means is that when our underwriters say the loan is clear to close, we don't have the grant provider also underwriting the loan. They trust our word to say, hey, like the underwriters on their team have already approved it. We don't need to do anything but send the money over to them. We've been running this program for over 9 years and we've never run out of funds. Our grant provider and us have been symbiotically working great together. To add on that, it's a state agency DPA product. So like when the government shut down a month ago or 2 months ago, we're still open. We're still pulling these grants. You don't have to worry about your client not having those funds. Our team goes and gets the grants. There's an extra condition in the loan, but our team will go out and coordinate the grant. We send you the docs, say, hey, get these signed, and we'll go out there and get the grant and make sure it's there at closing. Nathan has one of these actually wrapping up right now. We've already got the grant ordered, and it's not even scheduled for closing yet. So we've already got the grant on the way. So the non-occupying borrower 3, we do allow a non-occupying borrower 3. So like if you have a client that has that needs mom and dad's income, great, we can still do that with them as long as it's an FHA approved eligible loan. We can get mom and dad on there to co-sign for the kid to right out of school as long as he's got a good job. So he's going to need some income. We have no client recapture, meaning as soon as the loan closed, if something happened with that client and they needed to sell that property, there's no future appreciation owned. There's no, hey, you got to repay us back the grant. As soon as it closes, that client can do whatever they want with it. You still have a 6-month EPO policy, but because most of these products don't pay, because you're going borrower paid comp and you're not getting much of a credit on them, you're not really being charged if they were to move. So we want these to stick as long as we can. We prefer it to be about 6 months just to be from a safety perspective. You can't refinance it with the FHA anyways because it's, you can't streamline it for 180 days after first payment. So usually around until the 8th month or so. And then I covered the schooling is 100% reimbursable if you use our preferred partner. So how does this look to you guys, right? You need to educate your realtors because what you need to factor in, we can go into the pricing engine, is you need to factor in the pricing you're getting, the borrower paid compensation that you're charging, the closing costs for that area, and how many assets on hand the client wants to spend, right? So that way you can go out to your realtor and say, hey, Mr. Realtor, I want you to try to get 4% seller concession. So if you want to come in at a little bit higher at 6% and then maybe negotiate down, but if you get that down to 4%, that's going to cover all of our costs on this loan. So, and again, that's for you to kind of do that pricing ahead of time, let the realtor partner know that like this is the number we need to be at in order to make this work for that client.
Hey, Kyle.
Go ahead.
Based on what you just said, does this work through only single family residents or could it be used for multi-units?
You can go up to 1 to 4 units, but it needs to, they need to occupy one of the units, right?
Oh, of course. I mean, take it as
Yeah.
FHA. I just wanted to make sure we can't use this on
you can
2,
do
3,
4
and
units.
4s.
Yeah,
Okay,
yeah.
great.
And remember, if you go back to that other slide, that's the potential loan amount per unit based off of the FHA county, right?
All right.
So
Great. Thank you.
So yeah, you bet. So
I missed it.
no worries, man. So one of the other things, and I'll share this slide with you guys if you like it. So one of the other things I want to talk to you about is the structuring of the 1003 is a little bit different. You're going to treat the loan as the client has that 3.5% in assets, right? So you're not going to put a second lien on it because it's not a second lien. So you're going to set it up at 96.5% LTV. You're going to add a grant, the state agency, and you're going to put the 3.5% on that title of state agency on the asset section of the 1003. Everything else is going to be the same. You'll upload it into our portal. You'll get a condition that says, hey, the client needs to create education. They need complete education. This is a link to Framework. Framework is one of the companies I recommend because it's a HUD approved course. It's $75 and they can do it online and it's nationwide. So you don't have to worry about like sitting them down into a classroom and eating up their time, right? So $75, we refund $100 on the on the CD. Lastly, and this is what happened with Nathan's loan today, we went out, reached out to the grant provider as soon as the file gets clear to close and starts gathering those assets for us to be there at the closing table. We do say allow up to 3 business days. It just depends on when we reach out to the grant provider. We typically reach out every day. There are some days where it might be scheduled to be the next day. So 3 days always gives us enough time. So when it comes to closing, everything's the same. They're just going to sign their documents, go, and you guys get to sell the product. So any questions on kind of how the process changes?
That was pretty straightforward. I love that it's nationwide. Do you guys accept, I've done framework a few times. Do you know if they would accept like the Fannie Mae Home View course or the Freddie Mac?
We would accept it as long as it's a HUD approved education course. So some of them, the HUD approved is the key there, and we'll still have the $100 credit. I just know that framework works online and it's $75, so it's typically free once you factor everything in. So
got it. Okay, makes sense.
Yep. And then there are 2, and I wanted you to see this, sorry, because it's not eligible in Hawaii and Washington. So if you're in those 2 states, that's the only 2 states we can't do it in. Okay. So I've looked at a bunch of different DPA products, from Shinoa to Hometown Heroes to some local Iowa ones, local Texas ones, Cal HFA and HF, right? There's some local, there's some that are global. And so I'm not going to say our DPA product is the right solution every single time, because you might find another product that's better. What I will say is 90% of the time when I hear my partners talk about it, it should be a no-brainer as to why it's the best. So I want you guys to ask these questions though when you're interviewing these other products. Is one, what type of qualifying restrictions do you have? Like Cal HFA, right? They have certain funding windows, right? You can't fund during certain times. There's other things that are tied to them. Specifically, they also make you pay back the full repayment of the grant, and they take shared appreciation. So I've got a different spreadsheet that I went through like 15 of these different ones on. So you're welcome to look them up as well. But the big thing is, what type of qualifying restrictions do you have? Do you need to be a first-time home buyer, median income levels, certain occupations, right? When you remember with us, you just need FHA approved eligible and be above a 620 FICO. So next, how much payment can I get? Some of these places you can get up to 5%. Some of them you can get up to 2%. Again, it's all about the terms. There's some that will give you 3.5%, but they won't exceed $10,000 or they won't exceed $15,000, right? So, but the biggest thing for me, and the biggest thing that I think you guys want to be aware of, is how easy can I transition my borrower out of this loan in the future if rates improve or if changes happen in their life. Some of these grants and some of these second liens will sit on the client for 7 to 15 years, depending on the product. Some of them you require them to be paid off in full if you were to move. Some of them require shared appreciation. Some of them are forgivable for 2 years. Some of them aren't approved for 5. So just ask these questions so you're not the loan officer that places your client in something that they can't adjust or fix in the future, because they're going to remember that transaction. So like I said, forgivable day one, no repayment, no shared appreciation. You're setting them up to make a move in the future. So any questions there? If you guys want to ask one of the specific ones, I'm sure I can pull up my notes, and it's in a different folder. So if you guys have anything, I've got a matrix on like 15 different of these guys.
Let me see. I'm just trying to go through the chat too.
Oh, sorry, I couldn't see that.
No worries. One of the questions, do you allow multiple DPA loans per borrower?
Yeah, they can. Well, FHA, right? So it's built on FHA. Typically, you can have one FHA property, right? So
that makes sense.
So
with exceptions, I mean, if they're moving, to a different seat or something, maybe they can get a second.
As long as it's FHA eligible, then yeah. But for most situations, that's not going to happen.
Okay. And then Kyle, we actually had a few requests for your new email address. Do you have that?
Yeah, I'll drop it in there. It should just auto route forward, but it should just be kyle.wright@elend.com. Okay. And I've got my contact information on the last slide too, guys. So I want to show you one or two things else, but there's one more slide here that I want to highlight. We've got marketing materials already built to go out there and have you guys start marketing this for your clients. This is my buddy Jacoby, is actually my wedding. It's actually my first loan in the industry. So it's funny story. But I've got a Canva link. I've already got it set up for IMB. So you guys, and I think I'll show it to you after this. But you can just drag your pictures in there, update your name and image and your contact info and start marketing it immediately. So
Awesome.
pretty easy. This right here is how you're going to overcome, like, so for clients that don't have down payment assistance, it's a no-brainer, right? But for when you start seeing the pricing, you're going to get rates anywhere between 6.5 and 7 1/8 or so, depending on FICO score and other things. And you remember, you got to go borrow pay compensation. So the key to oversell this, right, and to get by that, hey, this is very high. I don't know if I like the rate. If somebody has to have it, then it's no brainer. But if somebody, why you want to use it when somebody doesn't have it, this is a really good framework for how to sell that to the client. So I'm going to give you this slide, but read through it, right? It's explaining why a 3.5 forgivable grant at 550 is a good move. If you take the math on it, right, 19,250 in free equity, no repayment, forgivable immediately, no resale restrictions. You start with basically 20 grand, right? The payment difference today might be like at a normal rate of 6.875 for the DPA and at a normal rate of 5.5%, that's a difference of $471. So how long until that money is basically a wash is about 41 months. So you're financially ahead for over 3 years, even if you never refinance. If we do refinance with a no-cost streamline, then if we do it at 8 months, you're basically pocketing $15,000. At 12 months, you're pocketing 13, and at 24 months, you're pocketing 8 grand. So even after 2 years, you're still thousands ahead.
And just to touch on that really quick, I mean, this is one of the advantages about doing a grant with FHA is they can do that streamline, later on. Granted, don't abuse this, guys. You don't want to put them in a grant and then immediately do a streamline refinance, right? But, we need AFR to recapture some money in interest payments, but, honor your EPO agreements, all that stuff. But, I think Chaffa just came out with something that says they will now allow streamlines, but for the longest time they did. Chaffa, they would keep that second there, and the only way to get rid of it was to do a simple rate and term refi or something like that.
And that's also kind of one of those slides right here is like, are they going to subordinate if you want to do a HELOC or you want to do a streamline in the future? A lot of places wouldn't allow it. So definitely, and again, that's that competitive advantage. Just look at that. Right. Lastly, right, keep the 20 grand, put it towards furnishing, investing, emergency, paying down other debt, right? The bottom line is you get the free equity now, and it's a really good structured email that you can craft up for a client to really sell this product really quickly. For future streamlines, this is all you need to remember. I know a lot of us haven't done streamlines in a while, right? That lender fees, title, settlement fees, and other closing costs can be covered by the YSP, assuming the net tangible benefit is met. Also, you need to prepare your borrower during the DPA transaction to have savings set aside mirroring their escrow balance, right? It's like a cost, but it's really not because you're going to get it back. But if they don't have it right away, then you can't do the loan, right? So just say, look, you just save that money over here on the side. You're going to get that back, 30 days after the payoff is ordered. So it's kind of a wash, but a lot of people may not have that money. So lastly, and then I'm going to jump into the portal for half a second so you guys can see it and ask any questions. This is my contact information, guys. I would recommend just pulling out your phone real quick and scanning this right over here on the left-hand side. It'll drop it directly into your iPhone or directly into your Android. It's also going to have my cell. You can call or text me whenever. Nathan does. You guys can too. It's also got my scheduling app in there. So if you wanted to schedule time directly on my calendar, there's a scheduling app in there, but it should have all my information. So make it easy for you guys. So I'll leave that for a second. If you want to scan it and put my info in there, I'll take any questions though too, guys.
Awesome.
Quiet group.
Yeah, sorry. I think we're all scanning. So I had to update my your email address and my contacts anyway. So
all good, and that worked. I built this whole deck myself, so I hope it's okay.
Yeah, dude, this is a great presentation. I think you nailed it.
All right, man. I'll share it with you guys. So go ahead.
Yeah, just a couple quick things. So I've worked with Kyle at his prior lender as well, and I want to say like he has shown up repeatedly and has fought tooth and nail to get some loans across the line that I dished his way that were gnarly to say the least. So yeah, he's exceptional. The other thing I want to say too is keep in mind that that eLend has some of the best positioning for our customers in terms of shifting markets. Their rate negotiation policy is the best out of all of our lenders. I've had a great experience with numerous loans that we've been closing with them in terms of just the overall process. As Kyle will say, they're not the fastest as of yet. That said, like I underwriting has been common sense, and we have gotten some tough loans through that we have worked through that process. So overall, I've been really happy with eLend. So
we had a new leadership team come in 2 years ago, and they pulled me over here when they found me on the market, saw that I was available, and they're all Rocket ex-UWM folks, so these turn times won't stick around forever. We've grown 400% year over year in our growth, and just last month we hired 35% more underwriters. So we're going to address the demand. We're growing in a time when the market isn't growing, and it's also going into the slower months. So that just kind of can talk about our pace and kind of our philosophy here. I also have you guys lined up with our best account manager in the company. So that's a huge thing from a responsiveness, just being able to get answers right away. So I wanted her to attend the call, but she has too many files she's addressing right now. What else, Nathan? I could pull up the rate renegotiation policy, but it is one of the best. So.
I mean, I think just maybe like the portal navigation would be key.
Yeah.
And obviously, like eLend is, partnered up with Arrive, so seamless integrations there. Yeah, definitely a number of benefits there.
Yeah. So I wanted to show you guys this real quick. I had Sarah reach out. She wanted to start marketing this. So I already built a flyer or material that she can share with clients or realtor contacts. So you guys are welcome to piggyback on this, drop your own image in over top, add your own information, and just run with it. So after this meeting, I'm going to shoot you guys over the presentation. I'm going to shoot you over this Canva link. So if Seth wants to share that with the team, all you got to do is just drag and drop pictures and edit numbers. So
that's awesome. Looks great too.
Awesome. Tried to do it to your guys' branding. So let's see. I'm going to jump into the portal, like you said.
Yeah, maybe just like some pointers, quick tips to navigate around on the site.
Yeah, so our pricing is awesome and Govy, and I can show you kind of how how we do these loans. Let's just jump into Nathan's loan real quick.
Sure.
So this is a DPA loan. When you look at our portal, everything that you're going to do or we require you to do when you request ICD, when you upload documents, it's going to be on this loan progress tab. There'll be a blue button here that says request ICD. This is what we call the scroll of death, but anything that's happening on your file, you can see it right here from like the grant funds have been requested by eLend, right? So we got the grant funds over there. Nathan uploaded a document 5 hours ago and already got it in. So the loan details tab is going to tell you how the loan is structured. If you need to actually see the 1003, it's over here on this viewed loan button. You can go through and see what debts we're paying off, what the income we have is. If you want to see like your FHA case number, that's down here. A lot of people can't find it a lot of times. So it'll be down at the bottom here somewhere. Agency case number. So that'd be VA or FHA, depending on what's going on. We order those at the time of disclosures. You guys don't have to do anything there. The disclosure process is pretty simple. As borrower sign, you'll see a green circle here. If they haven't signed, it'll be orange. It'll tell you when they sign. If you need to update borrower contact information, it's on this contacts tab where you can come over here and edit it. So maybe you might have miskeyed the email address. You can update that yourself and resend disclosures once they've been crafted right here. If you wanted to add an additional processor, you can do that right there as well. As documents are coming in, you'll see this categorized in a format that kind of makes sense. If you want to see the underwriter income calculation, you can find that here as well. And then in general, all the documents in sequential order will be here. So if you ever need to go back and say, hey, these might have not categorized correct, or I thought I uploaded this, they're all right here at the bottom. Conditions are pretty easy. It tells you who's working on what, sent for review, being reviewed. If you need to communicate directly with an underwriter or with an account manager, their number and information is posted right here on our portal. So I will say a lot of times the best way to do is go through the account manager, but we don't hide our underwriters. So if you need to talk to them or talk to an underwriting manager, they're right there. If you need to make a request in the portal, it's right here as well. So this is sometimes best to work from because then you can have a logged event of what's happening on that loan and how quickly, Stacy's super responsive. So you'll get those answered and closed really quickly. As far as pricing a loan, you can save some scenarios here, but just to kind of show you, if we wanted to price like a DPA real quick, and if you guys got a bounce, I understand. We'll just price one real quick.
Hey, Kyle.
Yeah.
With renovation loans, they do cost more, pushing up the APR and pushing into high cost. And adding a DPA to that, I mean, I'm here in Chicago and it kills me across the board. I mean, have you
Well,
come across problems? Where do I adjust? Where do I make my pivot?
with DPA, you got to go borrower paid compensation too, right? So I haven't run across too many of them with the renovation side because a lot of them can be built into the loan itself. Like you don't have to, you can finance some of those costs, right? So
Yeah,
it depends on the
it's lots of
lender, I
costs.
imagine. Yeah, yeah, but I haven't run into too many high cost situations. I'm happy. Like our DPA pricing too usually gives a credit, or not our DPA, our reno pricing gives a credit. So I haven't run into too many high cost issues on the renovations I've done. I probably do about 10 a month or so, and I haven't.
Okay.
That's not a common thing with us.
Just a common thing in here in Chicago, I'm telling you.
Okay, I'm happy to do one with you though, and help it out. So guys, help me out. 96.5 of 400,000 is what, 386, right? Somewhere like that. Yeah. Okay. We'll just put up front. We'll pay
Nice.
in
That was quick
cash.
math, dude. 386 on the nose.
So this is a big mistake. People always put the sub financing here. It's a zero, right? It's a grant, so it's free money. So first time home buyer, it can be yes or no. I'll just mark yes. We don't, like I said, we just need to prove eligible findings. Borrower paid. I'm just going to do flat 0 so you guys can just do the math from it. Fix 30, 30, DULP. Let's just say it's like a 700 FICO. All right, you can save this in your scenarios down here. Oh, whoops, sorry. I need to put the value of 400. They've changed this up a few times on me. So let's see. Firm, they're going to say, yeah, $0 seems low. So it's going to show you all of our eligible products. And we have a lot of other eligible products. And I'll send you guys a matrix on what all we can do. When it comes to like the DPA, you can have a 3.5 or 2% grant. I say take the free money right now. You're going to see that in this situation, okay, we actually have some credit here. So that's good. So in this situation, depending on your closing costs and what you're charging BPC, you might only need 3% seller credit or 3% seller concessions in order to make this a zero cost loan. Do the math up front. I will say that the DPA product typically has a bell curve. So you'll see that. Let's see if it does on this one. Like this one jumped back up a little bit. So you get a little bit more premium there compared to the one above it. So look at this because sometimes you'll see that the best rate or the best thing might be a couple down. So it does have a little bit of a bell curve. In terms
That's really
of like,
not bad pricing. I mean, I know we're going borrower paid here, but if you can, get some seller concessions in the deal to cover your BPC, like that's pretty good for a 3.5% grant.
You guys should be selling the hell out of this, even if they don't need the money, because use that other email that I have and show them how they walk away with cash. I mean, do you think rates are going to improve next year? Most
likely.
Right. So why not just take a free loan and get the equity now and build on it and then just do a streamline, keep it simple. I mean, you don't even need to do an income streamline, right?
Have them keep some cash in their pocket, or if they need to pay off debt to qualify and that wipes out their down payment, now you can use this to come in behind that. Or there's all kinds of things you can do with this.
This is a great product. I want to show you too, like, even if you guys are like, oh, well, that rate sucks. Like, just look at our regular, I haven't even priced our FHA pricing today, but I just know consistently we're always at the top of the stack when it comes to Govy and non-owner occupied. So I don't even have to like go into Arrive or go into Loan Sifter or any of that stuff to see our pricing. If I just go to the standard 203B, like, par is 5.25% on this one, and you got a small credit. If you guys want to charge 1.5, you're at 5.5 right now on this FHA. And again, this is a 700 FICO 96.5. So
that's smoking.
Yeah. You make
smoking pricing.
Yeah, we're killing people in Govy, and we're killing people in non-owner occupied. So like I said, you got the best account manager at the company. And we've got a couple accounts that, like, I've had this teaser in front of Nathan. If we can get the right volume from you, we can get you on what we call our ambassador elite club, where you get way better turn times, way better pricing, a lot of different levels of support. You always have me, and I'll treat you like an ambassador elite regardless, but just some of the things to consider.
Hey, Kyle, for grins, can you look at the 2% grant pricing? I'm just curious.
Yeah, it's going to follow the same rate stack, but you're going to get a little bit more, right?
Yeah,
and again, this credit right here, legally, you still can't use that towards your compensation. It's going to have to go to the closing costs, and then the seller credit would have to go to your compensation, right? You can only get credit from one place legally. So, but yeah, definitely. I mean, that's, yeah. What else, guys? I'll show you one last thing, and then I'll give you the time back. So here's our product mix. You guys are set up brokered. We can do the 203B. This is an interesting one, the 203H. So not many people know this, but a 203H, you don't have to be originating that next loan where the disaster relief happened. So if you want 100% financing and somebody's moving from California where there were wildfires, and they don't even have to be a homeowner, they can just be a renter in California, and you can show that, then you can do 100% 203H, which has great pricing and doesn't require any down. So I'll pause there. We covered the 203K, limited versus full. Good Neighbor Next Door, it's another great product. So,
I mean, the $100 down, I don't know many people that are doing that right now, but that's pretty cool.
We do that. We also do the Good Neighbor Next Door. I think this one actually, if you can find it, it's half the purchase price. So
yeah, the hardest part with that is just finding a property that qualifies. I have seen a few more coming out on the HUDhomestore.com website.
Right.
So I mean that is good, but for a while there you couldn't find anything. The hard part is there's going to be 100 and some odd people bidding on the house, and it just comes down to a lottery. So
exactly. But there's a temporary buy down on FHA, but you can't combine the buy down with the DPA.
Got it. Good. So
let's see. VA, we do the Earls, renovation, temporary buy down, fully amortized. Yep. USDA, we're great in USDA pricing, really common sense USDA underwriting. The problem with USDA is I still think they're is it 15 days backed up? Don't quote me, but I feel like they're working on files from the 5th to the 6th right now. So
yeah, it just depends. You guys do USDA reno and VA reno? Because I think it was the VA reno that had gone away for a while.
Maybe no, you're thinking about you're talking about OTC. Yeah, we have an OTC that's we're closed on that one right now, except for a select people that were grandfathered in based off of the volume they've had through it.
Got it.
So we're pretty strict on that. So reno wise, we're completely fine across the board. We can do renovations on manufactured. We're very lenient on manufactured across the board as well. As long as it's within guidelines, we're good there. I do carry a lot of weight too at the company. I'm very close friends with the CEO and COO. So when common sense makes sense and it's not in our guidelines, I'm usually able to take that to our exception committee. And if it makes sense and we can sell it and securitize it, we'll do it. We'll go against our guidelines if there's a weird overlay, or we don't have many overlays, but I have run across it in the renovation world or the manufacturing world. And then if I'm able to show that we can securitize it and it's fine, they're cool with it. So
cool.
I guess I don't want to sit here and just read through it all, but yeah, our pricing with the VLO IP is also really great. But yeah, I'm a resource. You have my contact information. I'm going to shoot you this matrix. I'm going to shoot you the DPA we just went through. And I'm also going to shoot you that Canva link. And I'm going to just pause and just let you guys off for any questions. Sorry, you got to see my hideous background. Go ahead.
You're good, buddy. There were 2 more questions that came in. Do you only offer the DPA on FHA loans?
Yeah, it is piggybacked on the FHA loan right now. We don't have it on other products. That's just where we're positioned right now. So.
No worries. And then is there a max? Let's see. Do you have a max down payment for grant funds?
Yes. So if I go back over to the slide, right, this is the max grant amount based off of the product, assuming, right, and this is big, right? So if we go to FHA county loan limit and search up, let's see. So in situations like this county, right, I don't know where it is, Abbeville, right, the one family FHA county loan limit is 525, 225. So if it's a one family, that's going to be our cap. But in situations where the county's like Alexandria, where's that, like DC, right? 1.209 million, then we're going to go to that 1.209 million or the FHFA conforming loan limit. So this column right here is the FHA FA conforming loan limit. So in that situation, yes, the FHA high county loan limit is that 1.2 million, but it doesn't exceed this, right? So we're going to go off of that 832 of the FHFA, which gives us a max grant of this. So you can always get your 3.5%. It's only when it's above the FHFA conforming loan limit. So like in California, this is kind of where we're capped at, right? And for certain counties. Otherwise, we're capped at the FHA county loan limit. Does that make sense?
Yes.
Okay.
Makes sense to me.
Well, you're sharper than everybody says, so
I don't know about that, man. Got a few crayons missing in the box, you know what I mean?
All right, guys. Thank you for letting me just hop on here and talk through it, and I'm happy to take any calls.
Yeah, that was a great presentation. I don't think I saw any other questions in the chat. So I just really appreciate you hopping on and giving us a high level overview of the DPA and the portal. And I guess one last question that I had, remind me about disclosures. Are we able to self-disclose those?
Yeah, so I'll talk through that real quick. So when I go over to our portal, right, we have basically built the technology to self-disclose. And again, we inherited a company that was 25 years old. So we're changing everything up, building it to be a Ferrari. But you can, with the way that it's set up right now, is in theory, you can self-disclose. Because it's still brand new to us, we have put a stopper. So when you click self-disclose, they're still being reviewed and they're being addressed within 24 hours so that we can check and see, did we miss anything in the tech update? So we anticipate that to be fully self-disclosed because you can fully view the LE now. We just want to make sure, like, is there any code or anything that we messed up before we just go immediately into full self-disclosure? So we anticipate that somewhere in the beginning of February. So, so that's just kind of where we stand, full transparency. So.
And awesome. I mean, I think when I did the self-disclosure, you guys are still able to get disclosures out same day anyway. So yeah, I mean, you guys are moving really fast on that. So
if you have anything you need, just call me. I'm like, I'll find a way to get done for you guys. So.
Okay, cool. Well, Kyle, I really appreciate it, man. That was a phenomenal presentation. Really appreciate your time. Thank you for, like I said, walking through some of that stuff. And if anybody has any questions, obviously reach out to Kyle. He is a fantastic AE, very knowledgeable, has been in the business a long time. And yeah, sounds like he's got the hookup for us. So thank you so much for everything, Kyle.
Yeah, absolutely, guys. Take care, guys.
All right. See you guys. Have a good day.